Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Good day, everyone. Welcome to the podcast. Thanks for joining us today. We're going to mix it up a little bit and go a bit left of field. It's been a little while since I've had some of my colleagues here at Momentum Media, who's the business behind Smart Property Investment, in the studio. Just have a chat about what's going on in the markets, in mortgage markets, and just the wider business sector in general. You might remember we've done a series of podcasts probably over the last sort of 3 or 4 months, prelude to and during the Royal Commission into misconduct in the banking, superannuation and financial services industry. It's been a long, drawn-out process. I think everyone's happy now that it's finally done and dusted. It all wound up last week. So that's the end of the formal proceedings with a lot of the questioning. Now we are all waiting and anticipating a report that will be handed down, which I think is going to be coming out early next year, around February or so. So what that's going to entail, we're not too sure, but there is probably still some scope for how that might be framed. A lot of the bank CEOs have been grilled over the last couple of weeks in particular across their mortgage business, and some interesting things have come out, which I must admit the mortgage industry is a little bit concerned about. But I'm not an expert in that regard, so I've brought someone to the studio here who's going to help me out, have a chat about this, and navigate some of the findings and some of the applications that may come out of the Royal Commission. Annie Kane, she's the editor of mortgages here at Momentum Media. Annie, how are you going?
I'm good, thanks, Phil. Thanks for having me on.
Are you sick of the Royal Commission?
I'm not you sick
love
of
it, don't you?
I don't want
It's
to
been
say
feeding
I
you
love
headlines,
it.
hasn't it?
It's definitely kept us busy as from a journalist point of view. I mean, obviously it's been fascinating to watch, but also in some points really concerning as well. There have been a lot of discussions, particularly in the mortgage and, as you mentioned, mortgage broking space as well. And as editor of mortgages, obviously that's been my area of focus for covering the Royal Commission. And there has been really, I think, a disproportionate amount of time spent on this area, given that, as you said, the Royal Commission was into banking, superannuation and financial services. Yeah. Obviously, a lot of it dealt with wealth advice. And remember in the previous hearings, we were talking about things like fees for no service, people being charged for fees when they'd passed away, things like that. But a lot of it had been spent on mortgage broking, which is quite surprising given the fact that there hadn't really been any major scandals in the mortgage broking industry as there had been in some of the other ones. So yeah, a lot of time being spent talking about it.
It's as an observer of all of this, I think some of the commentary has been really misaligned, and maybe the emphasis and focus placed on mortgage brokers is not warranted. And we'll get a little bit into that today because I know you've got a bit of a read and your interpretation of it all. I'd sort of bookend this chat with the fact that we are at Smart Property Investment, we're pro-broker. Every single home loan, every single mortgage I've had as investor has always been through a mortgage broker. And I cannot think of going into a bank branch. The whole idea of walking to a bank branch, even now, I just get anxiety about it. So, I am absolutely pro-broker. I think the outcome brokers deliver for borrowers is absolutely exceptional. And what we're going to do, and we'll talk a little bit about more of it, but just so our listeners tune in, tuning in right now, we've just launched, we've commissioned actually a report where we're going to look into borrower experiences. So we're going to go right into it.
Advisors commissioned Momentum Intelligence, which is the research arm of the Momentum Group. So we've commissioned the Momentum Intelligence research arm to look into some of the things that have been discussed during the Royal Commission, really focusing around borrower experience. So much of the discussions that have been being had were around what the potential ramifications would be if certain aspects of the mortgage broking industry were to change. For example, whether remuneration for brokers should change. Some of the questions being asked were around what would the ramifications be of bringing in a fees for service where the consumer pays for the mortgage broker, which they currently don't tend to. So we really thought it'd be good to get a better understanding of what the actual borrower thinks. So much of this discussion, as I said, had been asked to CEOs and people within banking, people within broking, but not so much to consumers. There'd been very few consumers brought to the hearings at the Royal Commission that were talking about a particular aspect of remuneration. I think actually none of them were asked about broker remuneration and what they thought about it. Instead, they were focusing on the case studies of misconduct for their particular case, as rightly so. So we thought it'd be good to find out what borrowers actually thought about the process and accessing finance, which channel they use, whether they're using direct banks, whether they're using brokers, and what they think of those two channels, just to get some more understanding behind the reasons behind why these people are using them and what they think about them.
I think it's absolutely critical to actually understand what borrowers think. And I think that's been a little bit lost in translation because it's all been focusing on banks and how banks pay brokers or banks pay other intermediaries to originate mortgages or other financial products. But it's largely irrelevant. It's about how good is the experiences for borrowers. And that's what this survey is going to look at. I'm just going to share a story with you, Annie, which is going up on Smart Property Investment right now. And if you're tuning in, you'll see this up online pretty soon. Gives you a bit of a context behind what we're trying to achieve with this particular thing. And the headline is investors may be charged a fee for finding a mortgage. Quite sensationalised, isn't it? But it's true under this new thing. The story says, recent comments made at the Royal Commission into Misconduct in the Banking, Superannuation and Financial Services Industry by CBA Chief Executive Matt Comyn have major ramifications for borrowers that choose to use a mortgage broker. Mr. Comyn, who was questioned by the Royal Commission regarding CBA's misconduct last month, suggested that mortgage borrowers should pay a fee to a mortgage broker for their service rather than the broker being paid a commission by the lender. Brokers currently generally provide the borrower with a free service with a commission paid to the broker once the loan settles. Broker-originated loans now account for about 55% of all mortgages, and it is the growth of this channel that has been credited with driving significant competition in the mortgage market. That's very important. CBA has the lowest share of broker-originated loans and the largest retail branch network. There are significant fears that should brokers have to charge a borrower a fee, demand for brokers would drop, and so too would competition. Borrowers could once again be forced to choose between a handful of retail banks. So I won't go into the rest of it there, but there's some pretty key messages there. Number one, let's go over this. How does a broker currently get paid for our listeners that aren't too familiar with this?
So there are different models, but the vast majority don't charge a consumer a fee. So what would happen would be if an investor wants a mortgage, they might go to a broker. The broker will then collate all the information. They'll do all the identity checks. They'll sort of do the expense checks. They'll do all the responsible lending requirements that are required of them. They will then apply for the loan. And if that loan is then approved by the lender will pay either the broker directly a commission based on the loan amount, or if they go through an aggregator, which is kind of like an intermediary third party, they'll pay the aggregator and the aggregator will pay the broker the commission. So it's typically currently the commission that a broker gets paid is around 0.56% of the loan amount. And then they also get paid a nominal trail commission as well. So for every year that the loan is paid off, they get around 0.2% commission.
Okay. So
total around 0.8%. That obviously changes depending on whether you're getting paid direct or if you're getting paid through an aggregator, because aggregators are different models and how they pay their brokers. But that's a whole other story.
Yes, it is.
Some brokers do charge fees for service, and that's usually people who are dealing with very complex clients. So someone, for example, who might have already 15 mortgages, they might be near prime, they might live overseas, for example. Different things might make a broker consider charging a fee for service, because then they would want to potentially cover their time, because it takes on average around 8 hours to write a mortgage. And if a broker is only writing a small loan, let's say it's only $100,000 for somewhere in Tasmania, for example, lucky Tassies, then they would only be getting a very nominal fee for that loan.
Okay. So listen to all that. Sounds a bit complicated, but it works, right? No, well, the thing is that, this is about, as an investor, the experience I have as an investor. What do I want? What do I need? How do I get it most effectively? And my point would be that investors and people that secure mortgages obviously like using mortgage brokers, because today, as per that story I read out, mortgage brokers originate, right? Whatever the word, it sounds a bit sort of techie, but 55% of all loans now go through mortgage brokers. So more Australians choose a mortgage broker than don't choose a mortgage broker. And that number has probably risen over the last decade from about 30 or 2% to 55%. So it's a huge amount of growth in the broker channel.
And that actual figure, though, is for mortgages. It's actually higher if you include business loans as well.
Okay.
But yeah, so there is definitely, not only are the majority of people choosing to turn to the broker channel for their mortgages, but also they are looking for the sort of competition, the insights that broker has. So I guess like if you sort of think about going into your branch, as you said, you would, sort of shudder at the thought of, but if you went into your branch, they only know their own products and they're only really able to talk about their own products. Yeah. If you go to a broker, they have access to a huge amount of different lenders. Most have access to around 30 or 40. There's obviously a whole plethora out there they can research and look into, and then they can really do all the hard work in terms of understanding what your situation is, what you're trying to achieve, and what would be a loan that would be suitable for you, given all of the data that you've given them.
So this is a matter of choice, right? If you go to a mortgage broker, you're going to get visibility of all the loans, all the options in the market. Whereas if you just walk into your bank branch, you're just going to get the handful of products that they might have.
Yeah, exactly.
Okay. It's all about choice. It's all about choice.
And it also provides a lot more competition in the industry as well. So like, the CBAs of the world have got their big branch network, as you mentioned. They've got really good standing in the industry, but also in the market, but they also have really good touch points with different communities all over. Whereas a much smaller lender, let's say if you go, I don't know why I'm focused on Tasmania, but if you go to a Tasmanian-based bank, you won't necessarily have a branch in your state, but you might want to use them if you're buying a property in Tasmania, for example. So having access to a broker will give you that oversight. They will know the lenders that will know that area. They know the lenders that have appetite for a particular investor risk profile. For example, some lenders have some changes around the kinds of apartments they would give loans for and where they would give those mortgages. So it's really just having that real understanding of what the lending policies are.
So I'm just going to pause there for a second. I'm going to read that headline again. Investors may soon be charged a fee for finding a mortgage. Now, if that sounds like, if you use a mortgage broker, and if you don't use a mortgage broker and you're thinking of using a mortgage broker, if that resonates with you, we really want to understand what you think, how you feel, what your sentiments are towards this, what your action is going to be in the future. This is the ideal chance for you to have your say on how you will secure a mortgage finance in the future. Go to Smart Property Investment now. You'll see a big, bold banner with plenty of bells and whistles around it, so you cannot miss it. Click on that. Complete the survey if you can. It's only going to take you a couple of minutes. We'd really appreciate it. And all the information that you share with us, obviously all anonymous, but it's going to be pulled together with a whole bunch of other information investors right across Australia for us to actually create this report. So it's really, really important stuff, and I really appreciate if you get involved in this. So why do you think, this is supposed to be a Royal Commission into mistrust and misconduct and trust, I guess, in the banking system. So the reason why there's a Royal Commission is that something has gone wrong along the way. And if you go back into some of the previous episodes of Smart Property Investment, we speak at length about it all. But what I'm interested in is, if this is a commission, a deep dive into the actions, the behaviours, the habits, the culture of the big four banks, why is the spotlight being shifted over to mortgage brokers? Considering that, we've got 55% of all loans now being written by mortgage brokers. Obviously, Australians love the idea of choice through mortgage brokers. Why the bank shifted that spotlight?
Yeah, I should actually just highlight it's misconduct in banking, financial services and superannuation. So it's all those three areas. It's not just the big four banks, but the last hearing really mainly focused on the big four banks, although we did also hear from other members of industry as well. But I think cynically, if you might say it that way, it's because the banks are sort of deflecting maybe some of the attention away from themselves. So if they're being asked about misconduct in the loan writing process, for example, what we're finding is, a broker can't approve a loan. They don't have the ability to do that. They just apply for one, and then the bank will do all the relevant risk analysis and checks, and then they will approve them. So a lot of the questions that the Royal Commission was asking the banks were sort of saying, look, there's been some, let's say, loan fraud, or there's been some misconduct in this loan writing area. What has caused it, and what can we do to prevent it in future? And a lot of the responses that were coming out from the main bank CEOs were saying, oh, no, this isn't coming from us. This is because, the majority of loans come through the broker channel, and obviously there must have been, some sort of problem through that channel, not through our own channels. Obviously, there have been issues where they are found already to be in the branch network and they've been dealt with, but it kind of seems that they are just deflecting the messaging away from the banks themselves to being like, this isn't our problem, this is something else that is happening in a different channel. Obviously that's quite a cynical view, but it does seem that way, and I think not all of the big bank CEOs, but some of them have been guilty of doing that. And I think that was our main concern with Matt Coleman, CEO of CBA, comments when he was asked about remuneration. It felt like he was suggesting, or really sort of trying to get the message out there to be like, I think a consumer pays model would work and potentially be a better alternative than the current structure. And it seemed like he was sort of testing the waters to see what other people would say, like maybe, kind of highlighting to the other big four bank big three, I suppose, exclude CBA, CEOs sort of saying, what do you think, guys? Like, we should already mention, though, that there is work going on already to change the way that brokers are paid, to try and reduce any potential perceived conflicts of interest. So the Combined Industry Forum is a big group that got together, and they've already started to implement changes. So we already are seeing lenders change the way that they pay commissions to brokers based off their own sort of self-regulation, if you will. But yeah, it's been a really interesting play, if you will, with the different actors showing different sides of themselves and playing different hands.
Yeah, it's to me, it comes back to the fact that I'll talk about my experience, and I talk about a lot on the Smart Property Investment Show, securing mortgage finance, and my mortgage broker has been absolutely critical to securing finance.
Good to hear.
And and that was in the good old days of serviceability assessments. The world's changed quite a lot, even since I last mortgage I got. It's probably a year or so ago now, and it's moved quite a lot from there. The bank lending criteria is a lot tighter.
Yep.
They're deep diving a lot more into expenses now.
Yep.
They've tightened up credit. And, for good cause in many ways, but I don't want to get into impacts on the housing markets right now. But, for myself, talking from experience, the idea of trying to secure a mortgage, not using a mortgage broker, I just, the mind boggles. So to me, it's about the experience and the outcome. The outcome is choice. It means that I can secure financing. And for me, it's about time and effort and all this sort of stuff. Some of the criticisms that come across brokers is that they always place you into the lender that pays the highest commission.
We hear that a lot. And again, like that was something that was raised repeatedly in the Royal Commission, being like, oh, well, this commission structure must incentivize, if it's based on the loan size, it must incentivize them to put you in a borrower into a loan that's high, or to put them to a lender that's paying the highest amount of commission.
Yeah.
That doesn't really hold up.
It's just not the case. I know you've done a decade of research in the Advisor, which says that the commission that gets paid to a mortgage broker is very, very low in influencing where a broker might put a particular loan.
It's actually one of the lowest factors that a broker considers. Because again, if you think that they aren't paid a fee, so their main way of getting business is providing a great consumer outcome to their borrower.
Yeah.
So if an investor comes to them, they really need a loan, the broker will know where to put them. They put them in that loan. The investor gets that property.
A broker's going to put an investor into that loan that's most likely to be approved, because they only get paid when a loan is actually approved, right?
I mean, that's right. But again, it's really taking into the circumstance of that borrower.
Absolutely.
So, I mean, they obviously are going to know which lenders have particular appetite for that investor. They're also going to know if that's a good outcome for that investor. They might want a larger loan because they want to do renovations to the property or something. There's a really whole plethora of reasons why a broker might put a borrower into a particular loan. But again, I should also reiterate that they're always recommendations.
Yeah.
They're putting forward these suggestions of saying, these are the loans that we think would work for you. And then the customer at the end of the day is the one that
Here's the pros and cons with each of these different solutions. But it's a really important word that you said there was that the broker will know. And when I think about my relationship with mortgage brokers, if I had to start from scratch every time I wanted to get a new loan approved, and I must have, secured 30 plus loans over the years. The thing is that the broker knows me. He knows my finance. He knows the history of me securing mortgage debt. He has all the information ready to go, all these type of things. It's a huge shortcut to securing finance. I just sit there and think, if I had to stand in front of someone and explain each time, from scratch, and then when I want to talk to someone, it's a different person on the phone. It's just anyway, but this is what we want to try and find out. We want to know, you property investors listening to this podcast right now, what you really think about this. And if you use a broker, don't use a broker, or whether you completely disagree with us and think the best way to secure a mortgage is to go directly to the banks. We want to find out, because this information is absolutely critical to how we can actually paint this picture of what borrowers want. And this is all about borrower experience and how they secure finance. So to one of your points, Annie, you mentioned that it may have been a deliberate shift of the spotlight away from CBA into putting a big beacon on borrowers to try and divert attention to maybe potential misconduct within the banks. But some of the other banks that have come out have been a lot more neutral or even positive towards mortgage brokers. And to me, it comes back to the fact that, and in that story I read out, CBA has the biggest branch network in Australia, which are expensive to run. Even now you sort of drive into a little regional town in the middle of nowhere, you'll probably see a CBA bank branch, which is cool, which was really, really important, maybe 20, 30, 50, 100 years ago when pre-internet before the world changed and the way in which people have their relationship with money changed. Now you don't really need to go into a bank branch. The problem with CBA is that they still need to retain this huge branch network. So they obviously want people to walk into a branch rather than using a mortgage broker. So the largest branch network by some margin.
Yep.
And when you look at broker-originated loans compared to the other major banks, CBA is the lowest, right? So it's a little bit the other way around. Some of the other lenders like ANZ are very pro-broker and NAB, absolutely NAB, and they support the broker channel and they look to make it as seamless and streamlined as possible for Australians to secure mortgage through mortgage brokers. And their branch networks, ANZ, for example, been decreasing over the years because they actually understand the economics of running a branch network in this current climate. What's your sort of read of it all on this?
Yeah, and I think actually just bringing up ANZ, that was a really interesting testimony that we heard from Shane Elliott, the CEO of ANZ. He actually said that the branches were not a well-utilised or really efficient
was that
channel
his language, was it?
For
sort
mortgages.
Of quote, end quote, or is that paraphrasing?
I think well utilised is well used was what he said. And also he said it's a not efficient channel for originating mortgages. He was saying, look, I think only a third of our home loans come through the branch channel. More than half come through brokers. So again, like the major bank CEO saying that he's completely understanding that consumers want the choice to be able to decide where they go. And even if you have a branch network, people are still going to brokers. And, as you mentioned, the cost of running a branch that isn't actually bringing in a huge amount of money doesn't really seem to make economic sense. So he was actually saying, the branches exist, but they're not really providing the bank with a lot of profit because the things that are going on in those branches are things like just cash deposits or general banking transactions rather than things like home loans, which is where the bank makes a lot of money.
I think it's critical, and this is what it all comes down to, is putting the borrower first at all times. They're the person securing the mortgage, and to me, it makes sense to be as accommodating as possible to ensure it's as easy as possible for a borrower to secure a home loan.
And then everyone can afford it. Again, some of the things that the ANZ CEO was suggesting was like, well, if you do bring in a fee for service, that could have unintended consequences where if how do you set that fee? Yeah. If you're saying it's now going to be $1,000, let's say, to write a mortgage, not everyone's going to be able to afford that. And you don't want them to then be forced to go to their principal bank only because they have no other choice. Yeah. So I think it's really requires a lot of consideration, and really that's why we want to know what borrowers think, is to really show the Royal Commission, you've asked all these questions, you've asked some of the banks, here's what the actual end consumer thinks.
And borrowers want flexibility, they want speed, they want
convenience.
That's the word I'm looking for. Absolutely want convenience. And by 55% of all mortgages now going through the broker channel, it keeps all lenders competitive. And this is a huge problem. If Australian borrowers stop using mortgage brokers because there is a big fee put in front of them, it's going to reduce competition, number one. And you only need to go back 20 years to when you had the birth of Aussie and Wizard, which completely put competition into the mortgage market. It changed our financial services landscape, and it was pro-borrower. It actually stopped a lot of the anti-competitive behaviours. Well, a monopoly in a sense, in that you had four major banks who derived the majority of mortgage market share. They were able to keep prices where they were, and competition come in, disruption come in, and the way in which Australians secured finance changed completely through Aussie and Wizard. And from there, it was essentially the birth of the broker channel, which has blossomed, to be fair. 55% of all mortgages. So, and growing. It's still growing, and you only need to look over to the UK. And we spent some time there, a couple of years ago, looking at the broker market. And what's their market share? 70 plus? 73. Yeah. So there's still some way to go for the Australian mortgage market. But anyway, we want to know what you think. Have your say. This is your chance to have your say. This is really important to Smart Property Investment, also myself. If you don't mind just helping me out with just filling out the survey. It's on smartpropertyinvestment.com.au. Go and find it. Click on the button. It's really, really simple. Will only take you a couple of minutes. Also, there will be a link in the show notes. So wherever you're listening to this, whether it's on smartpropertyinvestment.com or any of the different podcast players on your mobile telephone, just click on the link. It'll take you straight there. Fill out the survey. I'm going to be keeping a really close eye on this, and I might share some of the interim findings directly with Smart Property Investment listeners. And even today, you might not understand or appreciate just how many people are listening to this podcast you are part of a considerable community of property investors. And I feel as though this is an opportunity for us to actually have our voice, and this is me talking as a property investor, to really give an insight into what I want as a borrower. And we're going to share this information with a whole range of stakeholders, both in industry and also with government, so they can get a true understanding of what's happening. smartpropertyinvestment.com.au. Go and check it out. Click on the link, fill it in. Annie, thank you so much. I think we're touched on some of the key issues, and I'm very neutral in everything I do, and I'm very conscious of that. But it's you only need to listen to this podcast for a little while to know that I'm very pro broker. So if this sounds a little bit aligned a particular way, it's because I genuinely believe in the value that mortgage brokers provide.
You should do our borrower experience survey, I feel.
Absolutely. I am going to do it. I am going to do it. Absolutely going to do it. And I'll even tell people what I said. I don't mind. But no, thanks for your time. Thanks,
Thank you.
Thanks for the interpretation of the Royal Commission. Well, there's a fair bit on Smart Property Investment as well. Go and check it out. If this is all sort of news to you and you don't really know there's a Royal Commission going on, plenty of podcasts that we've recorded over the last sort of 2-3 months. Go and tune in. There's plenty of info there. But if you have any questions, email the team and we will fill you in as much as we know. editor@smartpropertyinvestment.com.au. That's probably a lot for today. Remember that story. It's coming out. It's called Investors May Soon Be Charged a Fee for Finding a Mortgage. If you want to have your say, complete the survey. Thanks for tuning, everyone. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.